So make sure that you don't forget these things here. Right, so one, rally, don't forget. Right, example, don't forget these things are very important. You'll use them every day. This here. So this is a bullish rally. Then second, or the block. This is called order block here. 2 candles, so this is a bearish one. Very important. Don't forget these things, please. Make sure that you go and recap on the video where I was explaining properly. They are very important, very sure. Then go to the previous video, you'll see properly. That rejection or this is very important. Go to the previous videos and watch these things, and then you get to understand. Don't forget these things. You're gonna use them a lot throughout every day before you start trading. You're gonna, so there's a video, I think it's the second one before the review. I explained it properly. This is very important. So here I'm just giving you a review as to what it is. So fine. So now let's start with patterns, right? This is very important. Patterns. Sorry, let me see here. Type of patterns. Very important. Type of patterns. So we have got bullish patterns, right? Make sure that you practice these things. So we have got continuation patterns. So yeah, so we have got something. So first you get the direction. That's the steps. I'm going to give you the steps here. It's going to be something like that. So first you look where the market is coming from. It's very important. Then when I do the review, I'll be able to show you everything in total as to how do you place the trade, how do you get the direction, how to confirm the direction. But today this is very important. Then first step, check. That's the first step. You check where the market is coming from. So how do you see that? You look at the lowest point, the low and the high. Then how did the market came about? So now if there's a low and then a high is confirmed, then the pattern that takes place, you look for that type of a pattern. So this is called a continuation pattern. I'll show you. Then break, you buy. Break, you buy here. Then your stop loss to the nearest low on your pattern. At least give it a room there, at least 5 pips, not close. So you shouldn't put it here. You shouldn't do this. Don't put your stop loss exactly at that point. It's not correct. So give it a bit of room. So entry, what's the rule here? Make sure that the candle that breaks here, the candle that breaks here, the candle that breaks 20 pips less. The candle that breaks your pattern, it must be 20 pips less. So this is a bullish continuation pattern. What do you wait for? First, you identify where is the market coming from. How do you see that? You look at the high and the low. So if now this is identified, then now that pattern is confirmed. Then what you're waiting for? You're waiting for what? For buy confirmation. So the tricky point here is that is being patient. Be patient. Don't buy or sell if the market hasn't broken your pattern and close above or below. You see? So in this case, so now when you have got the low here, no, sorry. When you have got your low and your high, it's confirmed. Then you're looking for a pattern that's going to take place. Then how do you buy? You wait for the market to break your pattern, 20 pips less. So it can be any amount of pips, but it should be 20 pips less. Your stop loss, make sure that here, from here to here, is very important. Here to here, here to here, it should be less than 55. Maximum, that's the maximum that you can go. Very important. Your stop loss, it should be 55 pips less. Maximum. Meaning that your take profit, it must be always greater than your stop loss. There. Right, so our nearest take profit would be this one here. Why? Because of the high. So your take profit, your stop loss are guided by your highs and lows. So this will be our take profit. So, but this here must be always greater than. So it's very important. So this here. So this here. TP must be greater than SL. Always make sure that your take profit is greater than your take profit by 10 pips. Always. Why do you do that? You make sure that even when you lose a trade, then when you win trade, 2 trades, you know that, okay, fine, you win almost 3. So make sure that don't be in a case where your stop loss is bigger than your take profit. So this is important, very, very important. These are very important rules. Make sure that you follow them. First thing that you do on a 1 hour time frame. So these patterns, this is entries. Remember, entries, we do them on 1 hour. Entries. 1 hour time frame, right? So this is entries. We check this on 1 hour time frame. So this is what? A continuation. It's a bullish continuation pattern. So here's another one. Same. You wait for the market to do what? To break. Then that's your entry, your stop loss then. Your entry, your buy, your SL. Your take profit is guided by your stop loss. So your stop loss, your take profit must always be greater than your what? Your stop loss. It's very important. What do? You wait for the market to break. Do you remember what do we mean by breaking? So there's a difference. I want to show you what do I mean by break when something is broken. So this, the market didn't break. So if now the market is still, this is, let's take this as the current candle. It's like this, or no, let me just do like this. So let's take, we have got the current candle like this now. and it's still working out. This, the market hasn't closed, so this does not give you a chance to buy this thing. You wait for the market to close. And no, but let me just take it out. I've got something interesting to explain to you. But this is how we say. So this is closed when this happened. So we'll say that this market closed above when this happened. This, by looking at this one here. So this is the confirmation that now the market is what? It is closed. So meaning now you can buy. How do we calculate the 20 pips that I was talking about? So you calculate from the body to the resistance. Remember, we did resistance. So there, that gives you the number of pips. Remember, this must be 20 pips less. Shouldn't be beyond 20 pips. 20 pips less. Maximum, at most. That's where you calculate. So you check. So if it's 15, 10, 5, then it is correct. Then you can enter the trade. So it's confirmed that now the market is what? It has broken up. But remember, how do you enter it? You look for this kind of patterns. This is a continuation buy. So you buy when the market closes above that point. Same applies on this one. So when you have a pattern like this, what do you do first? Same rules apply. You check your what? Your low, your high. So meaning this is on a what? Is on an uptrend. Right? So you wait for the market to give you this pattern. So within this 1 hour time frame, don't get involved. Normally the market is a bit confused because it's what is retracing. So what you wait for, you just need to have patience. It's very important. Wait for the market to give you a pattern. Then when it gives you a pattern and then it breaks, you buy. Then you take profit above these points. These are the points of take profit. But remember, it's guided by your break. It's guided by your break. It's guided by your break here. Break in candle. So that's what you have in this case. So that's what we do. So this is one pattern that we have again. Okay, there's a question. Okay. What if the stop loss pips to the nearest level is more than pips? So you don't take the trade. You don't take the trade. So make sure that if the trade is more stop loss, there's something wrong. You'll never trust it. If the trade is right, you'll never have it. It won't even reach 50. If now it reaches 60, it means there's something wrong. Something is incorrect. You'll see when you start doing it. It will never be like that. If it reaches 55, there's something wrong. That's why if it surpasses 55, there's something wrong that you didn't follow. So it's always that point. The good one, it's going to be 45, 40, then it's a good one. You understand? So normally when it's 60, you know you did something wrong. So you recheck or consult with me. So these are the patterns that we have. So we have got another one. We have got many patterns, by the way. Okay, so we have got this one again. Remember, then first, what do you do? Check that. Check that. Then, what do you have? Then, that's a continuation pattern that you have. You wait for the market to break. There are so many. There's your continuation pattern. Your stop loss, lowest point. You wait for the break, you take profit. So it's guided. Make sure that this is less than this one here. So normally it's going to be between 40 to 45. That's a good one. If it's beyond that, you know there's something wrong. Consult with me. So that's how the continuation patterns looks like. This is what we have. These are the called bullish continuation patterns. Bullish continuation patterns. So these are called bullish continuation patterns. That's what we have here. So this is what we have. Let me just check here. Let me fix something here. Let me check something for a minute. So this is what we have. It's called bullish continuation pattern. So it's called bullish continuation patterns. All this for buying, bullish patterns. Don't forget, don't confuse them. Bullish continuation patterns. This one. Again, same applies. Same rules apply. Bullish continuation. Continuation. Patterns. So that's what we have. These are the types of patterns that you look at. It's very consistent. The thing that you need to do is patience. The thing that is going to kill you is patience. If now you buy before the market breaks, you'll experience what you don't want me to tell you. So just be patient enough. There are so many pairs. Select the best 10 pairs that you want to trade. Don't trade everything. Select the best pairs, and then you show me which pairs have you selected, and then I'll be able to guide, okay, this is what, and then how did this one correlate with this one? Then I can assist you. So that's what we do. So these are called bullish continuation patterns. That's how we look at it. So let me just do that. So SL here. And then buy. Then buy. So that's what we have. This is how the patterns, this is what we're going to use to place trades. And the good thing is, do we all understand here? I want to explain something very important here. Do we understand what is drawn on the screen? Is there any question? Is there questions? No question. Okay, fine, good. Here is one thing that's very important. Let me remove these things here. Right? So every time, right, the market moves in waves. Market moves like this, right? Remember your low, your high. So here you'll be expecting a pattern here. A pattern, this is the location for a pattern. So relax, don't just go in if it's 1 hour. This is a retracement, right? So you're expecting, this is a location for patterns. Pattern. Patterns. Location, right? So this is retracement. You call it retracement. So the market is retracing. You'll see when we get to do Fibonacci, but you don't really need to, but you'll learn how it works, then you'll have an idea. Retracement. That's called retracement. And remember, this is a what? It's an uptrend. This is an uptrend, right? So that's what you remember. Someone came and asked me a question today. How do you draw this? Okay, fine. Make sure this is what you do. You need 2 points when you draw. Make sure it touches. Do you see how am I fixing it now? There. That point. There. Okay, sorry. Correct. Do you see how did I fix it? Here. So I fixed it because of 2 points. Always you use 2 points as a reference to this one and this one. So this is a what? It's a resistance point, resistance line, right? So that's why here you're expecting your pattern here. You're expecting your pattern here. The market breaks, you buy, then your stop loss below, then your entry, then your TP, looking at the previous highs, but we'll show you. So now it's just theory. So same applies here. Buy, right? So it will be different types of patterns. So here it's gonna be looking for what? Bullish continuation patterns. Bullish continuation patterns, right? So this is how it works about. But now there's one thing that's very important, right? So now we have got the market moving in waves, right? Good. So now there is the point here. So we have got this here. We have got that is a resistance. We have got that. The resistance. Remember, when the market is below, it's called a resistance, but when it's above, it says support. There we go. You don't buy here. It's not allowed. With this, you can't buy here. You don't work. We don't do break. We don't buy here. Let me just indicate here so that you can see here. You don't buy here. You don't look forward to buy here. That's the place where you look forward to sell. You buy here when the market is giving you a low. So always, this is the rule. Buy, close to a low. Sell, close to a high. Always check these things. So make sure that whenever you are buying, you are close to a low, or you are close to a, okay. So when you buy, make sure that you are close to a low. When you sell, you are close to a high. What does that mean? It means that it reduces your stop loss, meaning that you're on the right case. But if now you come and buy here, the market will retrace at you. So this is the highest price. That's where the market is changing direction. So always avoid buying this kind of breakout. We don't do this. It's taboo. You lose money. Don't do this. Even when you see the market is breaking with strength, leave it there. It's too bad. It's not good. It's not allowed. Don't you dare buy here. Nothing. You don't look forward to take any action here. You're looking forward for action. But remember, where do we take actions? We take actions below this point here, using what patterns? That point there, that point, that point, not here. So this is our entry zone, entry zone, entry zone, entry zone, buy entry zone. When the market does what? When the market breaks. So that point there, you see, that's what we have. So don't sell here. It's not a sell zone. So this is a what? It's a buy, 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 then sell, 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 sell zone. So zone. So do you see? Sell zone. Always look at the rule on your left, top left, buy close to a low. That's what it means. That it's very important. And then here, what? Sell, buy close to a low, sell close to a high. Meaning you want to sell something that's expensive so that you can make more money. You understand? So that's, you're going to reduce your risk of having a bigger stop loss. So now how are you going to have a stop loss of 60 pips? You're going to have that when you come and find yourself buying here. If you find yourself buying here, your stop loss will be below. Remember, all this will be your stop loss. So, but remember, when you look forward to buy here, this is your stop loss. Let me just repeat this. Very important information. So here it is here. So let's look at this, right? You come and buy here. This is your stop loss all the way here. Do you see that? So that's your stop loss. That's your stop loss there. But what do we wait for? You buy here. Then someone who knows what they are doing, they buy here. Then their stop loss is what? Is this. Then all that is their take profit. Do you see that how much you are risking? So when the market comes here and then it retraces, you will be in a very, very critical condition. So if now maybe you are risking, you'll be almost halfway to blow your account. You see? So it's very important that you do what? You buy close to a low. What do we call, what is it that's a low? What's a low? This is a low. Where the market swing, that point. That's why we have good patterns there. There. How do you do that? You wait for it to break. That's where you put your stop loss. So there, say, buy, zone. Then, there. That's a buy zone. Same applies here. Do you see that? So that's where you look forward to buy. It's very important, this one. I didn't indicate to the other guys, but this is one thing that I did indicate on Saturday, the time late hours when I say join up. It's very important. That's what you do all the time. So that's why we look forward to do what? To buy when we have got the pattern. So for an example, let's take we have got a pattern of this nature here. And then it does that. And that. that. So you see, this is the lowest point. This is a high. That's the lowest point of that market. So that's why we are looking forward to do what? To buy here, because it's close to a lowest point. But now if you come and buy here, it's at the highest point. So it's likely for the market to do what? To calm down. So that's why you avoid that. When you are here, then you see that now the market's retracing back to you. Then you are able to pull your trade, even when it's a small take profit. Then you are able to come out. But if you are here, the market will just drop back and come back to the actual point and take a stop loss, of which now the risk will be too much. You can't even recover. But if now your entry is here and then your stop loss is here, probably your stop loss will be 35 pips. It's minimal. But your next trade, you find that now you have got the take profit of 60 pips. Then you recover easy and even make profit. So that's why we say that. So make sure that your pattern and everything, when you buy, it's close to a low. When you sell, it's close to a high. So now your homework, right? Your homework, it would be to do the opposite of what I did. So now I was looking at bullish confirmation patterns. You'll go and find bullish, bearish, what's this, bearish confirmation patterns. You'll watch this, but now it's fine. Let's go through. So you watch this one and then you understand what did I mean by that. It's good that you, please guys, do the homework. So it's good to do the homework. It gets to, I get to see whether you understand, where are you lacking, then I can be able to assist you. But if you don't do the homework, it's a problem in terms of assessment to see where are you lacking and what should I do. You see, so please make sure that you do example. If now you don't understand, you tell me, then I can be able to assist you anytime. Me, I'm free. I'm doing only this. There's nothing that I do. So it's just trading. So anytime, just send me a question and then I'll be able to assist you anytime. So don't hesitate, even when it's 4 or whatever, anytime. When I see it, I'll answer you immediately. So make sure that when I send you a homework, you do it on time, then you're able to see. Then we're going to move forward together. It will be nice when everyone is making money at the same time. Not like others making and not others are not making money. So yeah, that's how it works about. So that's what we're going to look for. Now, this is how we enter the market. So now let me just give you a brief and show you on the actual market. Do we have a question on this before I jump and give you a brief as to and show you a bit of how it looks like on the actual chart? Questions? At least one question or comment. It's something new. I'm expecting comments or questions. Troy, questions? I know Troy has questions. Troy, question? Calvin, question? No question. It's clear, right? Crystal clear. Okay, fine. Let's try to look at it on the actual chart and see how it looks like. So you see, why do we say that it's important that you should okay, fine. So this is what we do. So now I'm not going to do the direction and all those things. You'll do it when I do the review and everything. You'll be able to see how do I analyze using all the things that we did from lesson 1 till lesson 3. So now let me just take this. Okay, fine. So you see there's a difference between these two things, right? So you see now what's happening. So the market now, there is a high, there is a low, but what were we doing? We were using 1 hour time frame, not the daily time frame, right? So in a scenario where it's a 1 hour time frame, when the market gives you something like this, you wait for it to do its thing, to do whatever it's doing. Then when it breaks, then that's when you sell, then you stop loss like this. But normally when the market is doing this pattern, it's not, normally it must give you a pattern like this, close to a high, something of that nature. Let me show you what I mean. I want to show you. Good. It was a very good one. Good. There it is here. So this is what we're looking for. This is what I was talking about, right? So first you have got that, you have got that, you have got that. Do you see this? There's no pattern. There's no particular pattern here. So you can't do anything. Our strategy in terms of pattern, you can't use patterns to trade this, because this is not a pattern. It's not a pattern that you can identify. So it's not a pattern. It's something else which we don't know what it is. So you raise that first. There's your what? There's your high. High. Wherever there's a high, there's a low. right? And now there's another high, there's another low, right? So now the market must give you, do you see what happened? Now this is what we call rejection. Do you see how it dropped? The market was falling, but when it gets here, it started doing what? Falling. But there, that's when the market does. Do you see this? Now the market broke this point, then you are in to do what? To sell the market, because now it's on a 1 hour, and now that's what you're expecting. So the market now, it has already, do you see how it was struggling from this point towards till this point? Then here when it breaks, you check. Okay, let's check how many pips is that. Is it 20 or max? So let's see. You see 11 pips from, do you see? Let me show you what I mean. So from the break to the close, you wait for the candle that close. From the break to the close, how much is it? So it was 11. Then your stop loss, this is your highest point, right? We don't put it on the body. So, but this is we're using what? A wick. So you put it up here, just above that point here, to give it a bit of room. Then you calculate how many pips do you have, right? From your entry towards that. You see how many pips is that? Is 42. Means your stuff is what? Is correct. You see that? 42 pips. Then you are in, you put your take profit. Then your take profit, where's your take profit? There it is here. There. There's your take profit. This one. Then you calculate how much is your take profit from the entry. Then there we go. Then you see it was 31, meaning that you need to do what? You need to drop your what? Your take profit. So your take profit was supposed to be the next high, which is this one. So we have got 2 here. So anywhere between that. So because this was too small compared to your take profit, you wouldn't what? Take this because your TP is too small. Do we see that? So your take profit, this was supposed to be the next high. That was your take profit, the next high. So you calculate the number of pips, right? So from there to there. So you see, it's 60 pips. So you understand? So that's what you have now. That's what you put it like that. So first you check your take profit, your stop loss, and check that your take profit must always be higher than your stop loss. Always make sure it's like that. Keep it like that all the time. But there's one thing that you need to learn and teach yourself. So all the time, whenever the market gets to this point here, remember this point here. Be cautious here. Look at what the market does here. Look at the reaction that takes place here. So now if the reaction is too bad, now you see something like reversal patterns here. Then you look forward to do what? To keep your profit. Take your profit and re-enter again, because normally the market will come back towards to that point. Then you enter again. Do you see that? So normally when you see that the market is retracing, because this is a what? It's a location. That's why you have to draw your resistance. You draw your resistance where you put your take profit. Every time, whenever the market gets to that particular point, you watch closely. Then you see what's happening. But now, after the market has dropped this point, then it's fine. You'd expect your take profit to be on the next point because of what? Your stop loss. Do you see? This was supposed to be our TP1. But why we didn't take it as TP1? Because our stop loss is big. Do you see that? Unless if you have got 2 trades, of which now it's a small trade, and then your first take profit, but the main profit, like if you're using proper lot size, there it is here. This is your take profit. Same applies. You see what happened? It does that all the time. Same here again. So you have got a pattern here. The market dropped here. It came back again in a form of a pattern. Then it broke that point. Then you stop loss. Then you look at your TP. So now let's look at this now. How much is it? So from there to there, 11 pips again. But from there, how much is it? Okay, let's see. There's a question. Please repeat and demonstrate the calculation of pips from the. Okay, great. So let me just zoom out so that I get to see. Okay, great. So the question is, please demonstrate. Okay, fine. So exactly where the market breaks. Do you see here? So start from where it closed below. Do you see? There. Is what is 14 pips. So basically this is what you have. Then till that point. Then do you see? So that's what you have. 13 is 12 pips. So it's good. Less than 20, then you are in. Then now your stop loss just above the highest point. Which one? This is the highest point, but we have got another one, so you're just gonna place it at that point. Then you calculate from there to there. How much is it? How much is your stop loss? Do you see? Do you see if it's correct? Do you see how many pips is that? 35. 35 pips. That's your stop loss. Then you take profit from that point. This is your first take profit. This is your first point. You see, this is where the market tends. So that's your first point of take profit. So that to that. Do you see that? So that's good. Do you see that? It's 44, meaning that your take profit is more than what? Your stop loss. So that's how you take it. So now this can be your what? It can be able to become your what? Your first TP. Then that's what we do. So this is just the preview. So now on Wednesday, I'll do a review of this, and then Friday I'll be covering everything in conjunction. So I'll be placing a trade, showing you how to get the direction, and showing you how to confirm the direction, and showing you how to trade, how to place the trade. So I'm gonna place 6 trades with you.